The truth is that once you accumulate $1 million, your financial responsibilities are only going to get bigger and it's going to be a lot more difficult to manage. The biggest one is that your investment losses are going to be far more costly. A 20% decline in a $100,000 portfolio is something that most people can stomach. They might even be able to ignore it. But a 20% decline in a $1 million portfolio, that's something very different. Losing hundreds of thousands of dollars during a market downturn, that's a pretty painful experience. And everyone knows not to panic during these environments, but that's far easier said than done. When you have a seven-figure net worth, learning how to manage your own behavior during these market cycles, that just becomes even more critical. Now, probably the most prevalent issue that you're going to face is taxes. You're simply just going to owe more taxes the more money that you have, and managing your tax liability is just going to get more complicated. So multiple investment accounts means multiple 1099s. You're probably going to have more positions to manage. You're going to have multiple stocks, funds, you're going to have multiple investment properties, private investments, and so on. So you're going to have to spend more time tracking which positions have gains, which have losses, and how you actually limit your overall capital gains. If you have at least $1 million net worth, you probably have a pretty high income with a higher income tax rate. So at this level, coordinating your portfolio tax liability with your income tax liability, that just becomes even more important.